You've heard the sky-high predictions for OpenAI stock. But what if I told you the real picture is far more complex than the headlines suggest? Today on SmartLearn Hub, we're cutting through the noise to separate hype from hard reality and give you the smart investor's playbook for handling high-growth opportunities like OpenAI. Let's start with the hype. OpenAI sits at the center of the AI boom, powering products like ChatGPT and driving excitement across Wall Street. The narrative is explosive. AI is worth trillions, and whoever leads will dominate the next century of technology. Companies like Nvidia, Microsoft, and Google have already seen their market caps soar thanks to AI enthusiasm. So naturally, many investors are asking, if OpenAI goes public, is it the next trillion-dollar stock? But here's the reality check. A recent MIT study found that 95% of major corporate AI deployments showed no measurable financial impact. That's right. Almost all those flashy pilots aren't moving the bottom line. Why? Because integration is hard. Tools like ChatGPT work brilliantly for individuals, but often stall inside corporations. They don't adapt well to complex workflows. They lack long-term memory for sensitive, recurring tasks. And budgets are misallocated. Over half of generative AI spending today goes to sales and marketing instead of genuine adoption. The real ROI isn't in hype. It's in the back office, automating documents, streamlining operations, and reducing outsourcing costs. Until companies crack this, OpenAI's short-term financial story looks shaky. But while the short-term picture is sobering, the long-term bet is extraordinary. OpenAI isn't just building chatbots. It's building infrastructure on a scale the world has never seen. Enter Project Stargate, a $500 billion global effort to build unprecedented compute power. The goal? To close the massive gap between today's AI and true superintelligence, systems capable of autonomous scientific discovery. In other words, OpenAI isn't just aiming to cut costs in HR and accounting. It's betting the future on creating tools that could literally invent new science. That's why investors describe this space as a moonshot, high risk, but potentially world-changing rewards. This leaves us with a paradox. On one hand, we have weak short-term fundamentals, 95% failure rates, poor integration, and no clear proof of profits today. On the other hand, we have unprecedented long-term upside and a genuine shot at breakthroughs in energy, medicine, and global wealth creation. So how do smart investors approach this? Treat AI stocks not like SaaS plays, but like biotech moonshots. Most experiments fail, but one breakthrough can justify decades of losses. The challenge is balancing hype with patience and speculation with due diligence. So, does OpenAI represent a genuine investment opportunity or just another speculative bubble? The answer is both. Short-term, stocks could slip if companies fail to prove real ROI. Long-term, if projects like Stargate succeed, OpenAI could become the most valuable company in history. The smart investor's playbook is simple. Look past the headlines, study the fundamentals, and remember, you're not just betting on corporate efficiency. You're betting on whether humanity can turn $500 billion of compute and energy into intelligence that rewrites science itself. And that's a bet that demands both caution and vision. So before you buy into the hype, ask yourself, are you investing in OpenAI's present or in humanity's future? This is SmartLearn Hub. If you found value in today's analysis, hit like, subscribe, and let me know in the comments where you stand on OpenAI, trillion-dollar giant, or bubble waiting to burst.